Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Well, things looking pretty crazy this morning, although quite a few interesting moves. So let's go and see where we're at. Hold on a second. I'm fixing my audio here. There we go. Okay, coming over to the charts. So here's the 10-year Treasury. You can see overnight, like, huge weekend gap, just absolutely massive weekend gap. Treasuries were really off and running, but it looks like they have completely retraced that since then. I don't see any real headlines or anything really explaining why that might be. I would note that there is still a pretty big jump up there in the steepness of the yield curve. Going over here to the S&P 500, again, pretty big gap down. They're kind of getting sucked back into it. All right, oil looking pretty similar. Gold, silver. Well, gold and silver are still kind of struggling a little bit. There is no safe haven, apparently. Copper looking really volatile. And then we get into the currencies. The Japanese yen, a lot of volatility, but kind of going sideways. And the dollar actually recovering some of that downside that we have seen in the past week. Bitcoin, meanwhile, they had a pretty big gap down as well. They are not recovering as well. So, kind of curious there. Now, I'm gonna try and be a little quieter here at the beginning because it's hot in here. I'm leaving the door open with the fan on. That means that it's going to be a little easier for them to hear me upstairs. They're trying to sleep, so I'm going to try and be a little quieter here. But we are seeing, man, as we speak, the Treasury's pushing down pretty strongly. I don't have, well, let's see here. Navarro is going to speak on CNBC in 10 minutes, so that's a pretty big deal. Uzi says no place left to go. Well, let's see here. I am hearing some stuff on the news squawk. Oh, Hassert is speaking. White House senior advisor Hassert says it is time to ease off the rhetoric a bit. Trump will listen to trading partners if they offer really great deals. So the market is really responding to Hassert here, I guess. And that's quite a move. I'm gonna pull up my my stock account here. The last day was pretty bad. Let's see, like my TLT shares. Yesterday or on Friday, it was only up 1%, and I have only made 3% overall on it. So while stocks are careening 10% in some instances, TLT has only moved 3%. The treasuries are really not paying out, are they? Yields are not doing what we'd expect them to do, says Izzy. Yeah. Well, I mean, they are declining, but not a ton. It seems that the Federal Reserve kind of saying, you know, that Powell's comments so far have kind of prevented yields from coming down too much. Yeah, all the treasuries are just falling at least. Personally, though, based on what I just heard on the news squawk, though, I think that the market's probably overreacting to this. Kind of overreacting to everything, but like, so here's the thing. Why did we get such a huge gap over the weekend? We had already fallen 2 big days in a row, right? So aren't the markets supposed to be efficient? Well, it is. The markets aren't perfectly efficient. But I think that part of the weekend gap is that the Europeans have just been saying absolutely unhinged things over the weekend. Like Macron was saying, maybe we just expel all U.S. countries from, or all U.S. companies from the EU. Macron is saying, maybe we just expel all U.S. companies from the EU. That's absolutely crazy. That's just bonkers thing to say, don't you think? I tell you what, I think that the Europeans are kind of taking the same game theory approach that maybe Donald Trump is, which is like the more unhinged and crazy your opponent thinks you are, like the better off you are in the negotiations, you know? But I think everybody over here in the United States is like, wait, we're friends with these people? Like, what the F? That is, man, maybe we shouldn't be so close with Europe. I think that's what a lot of Americans are thinking right now. Let's see here. Today I learned NinjaTrader 8's market analyzer can't do basic close above or below SMA without you having to hold. Well, I get what you're saying. You're not wrong. But it's not that bad. Wait. That's the wrong thing. Okay, so you get a market analyzer. We're just going to add this basic futures list right here. And then we can come in and we go to the columns, and there is an indicator, and then we choose SMA. Oh, where is it? There it is, SMA. Okay, we'll do 14 period SMA. Okay, and then here in conditions, you have to add condition, add color for background. We'll make it cornflower blue. And the text, well, I don't know what color. Probably we should use black. Black text. EF. Greater than, or is it cross above? know I've done this before. That's not it. Yeah, it's not that I can't do it. It's that I shouldn't have to. I do agree. It's pretty cumbersome, right? Fed have closed board meeting on April 7th? What? Oh, there you go. Okay, I got it. Oh, no. Because I said greater than 0. It's always... How do you say if it's greater than the price? Sure. But I think that what it should be, or the way that I would, if Seth was able to make his own platform. Oh, you can't do it that way? Maybe not. Maybe you're right. Maybe the way that I was doing it before was with tools that John Bottomley had given me. Because basically you have to go and like change the SMA to have some extra little things. You have to make an SMA indicator that returns a value for above or below and use that. Oh, you could do that. I think there might be other things where it's like, oh, never mind. I'm thinking about alerts. Conditions. Last price is greater than the SMA, and then you alert. That's what I was thinking of. You're right. So I think that I was using John Bottomley tools. But the way that it should be is in your indicator, there should be a section for you to add analyzer column stuff. That's how I would do it. I guess, well... So, how did you do it? You said you just basically had something, if this is greater than this, return 1. And -1 if it's below. Let me I'm gonna eat here and research a little bit. There might be a better way for us to do that. You're right, I'm muted. Man. If NinjaTrader reneges on the lifetime license, I'll open source the platform. No. Don't open source it. Well, we just sell a better platform. The issue is if you open source a platform, it's really hard to make something that's really competitive with it being open sourced, right? So we should sell a platform, make money off of it, use that money to fund further development and hire a lot of developers. But I don't think that they would do that. I think that what the worst that NinjaTrader is going to do is they're just going to continue to make life a little annoying for the lifetime people trying to run against different data providers and brokers. I don't think that they will like cancel the license or anything like that. Navarro says, talk of discussion is silly given expected tax cuts. Yeah, assuming that you can pass those tax cuts. Yeah, this seems familiar now. I think that you can make your own market analyzer column. So you could make one instead of having to go into, you know, instead of going in here and going columns, and then I want to add an indicator and then yada, yada, yada. You could just make it show up here as SMA. You can just make it show up here as SMA. And then override the on render to color it the way that you want. And I might be able to make it so that you still get this bit down here so that you can still choose which indicator it is. Oh, yeah, okay. Let's drop this for a second. Navarro's doubling down on the tariff calculation. It says it was a sound count. The method is sound. And for some reason, my body is being really sensitive. It's like my ears, like the skin around my ears kind of itches from the headphones. My watch kind of itches. Okay, so there is a correlation indicator in NinjaTrader, right? But you only get to put in the instrument, right? So if I want to do correlation against another indicator, kind of hard, right? But I think that you can go in here. Probably already have one. Well, I have my own correlation for starters. No correlation in angle is mine. Correlation angle is a Euler thing. I think I made a strategy once that was like, oh, by the way, we should turn on our indicator. Probably would have already, sorry, our strategy. Probably would have already done something. Okay, but anyways, there you go. And Steffa says, what are you building? Well, I don't think I'm going to go all the way. I think I'm going to show Gus just enough because I know he's pretty smart and he can code a little bit. Show him the little bit that you need. So I think that what you do is you create a new indicator and you pass in... Man, they're still moving on him. Right? You just use the correlation with code and you should be able to make one that's... You know, you have a cumulative delta and then you pass that as the input series. Okay, Von der Leyen, who is, that's, I forget what country they're from. There's somebody in the EU, or is that the head of the EU, isn't it? That's the head of the EU. The head of the EU saying we are ready to negotiate with the US on tariffs. Okay, so everybody is cooling things down considerably. Are we? We are. We are now getting below Friday's lowest levels on the treasuries. Okay. Okay. So first of all, this is falling pretty hard on people basically like cooling the trade war rhetoric. Seems that we are lower than we were on Friday in the treasuries. So that's pretty wild. Zamir, the bids look really bad and the big ones are really gonna. Well, I mean, the liquidity in the treasuries is really bad overall, right? When you're putting up less than 1,000 contracts, I'm not gonna trade that. I'll let the robot trade that, but I'm not going to trade that, okay? The market is really reacting to these headlines coming out from people really trying to cool down the rhetoric from over the weekend. It seems that everybody has kind of reached their like, this is too much. We're going to cause damage here. I don't really feel like that the fundamental situation has changed, but okay. Anyways, for the market analyzer thing, I do have a way to do it. I just forgot. I thought that it was from John Bottomley, but it actually wasn't. It was from Lizard, and so I went to my old PC and saw that I had never pulled those columns over. So now if I come in here, I should be able to see. Oh, not yet. I might have to come in and open up a Ninja Script window and why do I keep closing everything? It's funny. I think I need to rebuild. So I'll do that. Build. Okay. Now when I come into the columns, there's the lizard indicators. And for this one, ATR trailing stop is one that's on there. There is like, I think a multi SMA, but I don't have that one on here. Or like deviation bands. Multi-band smoothing. Okay. He probably has one, but what I'm going to do is I'm going to just take a quick peek at what he's got in there to see if there's... Is he changing the current value? No, he's not. Oh, that's interesting. So all this one really does is make it as a top level thing. Okay. So now I want to do a test. Ninja script property, public indicator, my indicator, get set. Will that build? No, it does not like. think it wants a using declaration here, so try that. Using. Oh, actually, can I see? Wait, market analyzer, column. Oh, nope, doesn't show it. It says there's instrument, but indicator is not visible. It's not, I'm not available for me to look at. Hmm. Okay, we have to do some research.
Order submitted.
Okay. Donald Trump is tweeting saying, "Don't be weak." And I think that that's maybe why the market reversed there a little bit. There, like, things are happening faster than I getting it on the news squawk. So I really don't think this is tradable for me. But we'll let the robot do its thing, okay? Huh. Of course, now Ninja Traders Forum is not cooperating with me. Why the pending order empty? I don't know what you mean. Okay, so it uses the selector now. But when I actually pick something, I don't see any change here. Well, funny, this guy, Steve L, is actually trying to do exactly, well, not exactly what we're trying to do, but it's he's doing correlation. Remember, we were having an issue with correlation. Oh. Oh, okay. Wait. Oh. This guy's one is, okay, I'm going to use a switch statement because you still have to initialize the indicator somehow. That's very interesting. Wait, let's keep reading here. Let's come back. I don't know. I think the robot is going to lose here. Well, we'll see where it is in an hour, right? I think in this situation, it's kind of luck as to whether or not it makes money. Ah, the Fed is having a closed board meeting at 11:30. They've canceled the April meeting and they're having it now. Emergency cut? Do you think it's for an emergency cut? If it's for an emergency cut, then Treasury shouldn't be reacting as strongly on the sell side, should they? Well, maybe not. I mean, it's like low liquidity and everything, and the robots are going to hit the market. It's going to move it. Crazy, 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 crazy. Why is it not? Because of, I just answered that. I wouldn't call it pending order, by the way. I don't think anybody will know what you're talking about. I would call them resting orders. No, what? Can you not hear me? Oh. But was it the whole time I was talking and what I was muted? I could be. Their market makers have pulled their liquidity because there's so much volatility. They had like a 4% gap down overnight. When that happens, the market makers tend to not put up very much liquidity. Because, you know, there's a trade war going on. So, for small accounts, this probably isn't going to be the best action for you. It's very likely to just, like, destroy you, because even if you get the direction right, there can still be a pullback against you that's, like, larger than your account. So, and honestly, you know, there's a lot of randomness to this, because it kind of depends on the next thing that gets tweeted. Can you predict that? Oh, that's so weird. So for Ninja Trader's side, somebody has tried doing this before, and they basically say use an enum, because otherwise you'd have to use reflection, and they don't support reflection. But I'm sitting here like, well, why not? Trump's approval rating is the worst ever at this point in their presidency. I mean, there was I was seeing a lot of people pushing a poll over the weekend that showed that since Donald Trump had implemented tariffs, that his approval rating went up. But seems like kind of a bizarre thing for you to bring up now. Is it though? Yeah, is this the lowest ever? It kind of depends on, probably would depend on which bite. So a lot of what will happen is selection bias, right? Like maybe there is one poll out there where this is the lowest that any president has, the lowest approval rating that any president has ever had at this point in their presidency. But I don't know if that would be a fair comparison, because like, are you going to say, like, are you going to look at, like, another president's second term? And I don't know. This is we're kind of in a unique situation where I don't even know if those metrics are really even comparable anyways. You know what I mean? At the same time, this is just kind of another one of those funny things from the left that is like, okay, let's just give them that. Let's just I don't care what source he's using or if it's right or wrong. Let's just say, okay, this is the worst approval rating at this point in the presidency ever. So what? Why does that matter? Why should I care or even be talking about that right now? Because guess what? He's not going to be up for re-election in 4 years. I know he's talking about like that they're looking at it, and I bet that they probably are looking at it for him to like run for a third term, but it's not going to happen. It's not going to happen. It doesn't matter. Oh, you guys want to ban him already? I thought we were going to try and not ban him and just ignore him more. I don't... Okay, let's not ban him. We won't ban him. If Octavius, if he gets irritating enough. So during this whole trade war thing, I've thought a lot about, how should the content on the live stream and the channel change based on what's happening right now with the tariffs. I've been kind of trying to play it as detached as I can. I could just go like full out MAGA, and I'm not necessarily saying that this is my opinion, but I'm kind of thinking like, what would be the thing to say in this situation that would like get the most attention and like the most followers and the people to view? And I kind of feel like that if I were to come in and be like, this is like the worst thing that ever happened. This is, Donald Trump's going to put us into a recession. Donald Trump is such a terrible president. Everybody in the EU, they're totally right, and yada, yada, yada. I think if I did that, I don't think that anybody would watch the stream. Do you think so? Do you think that there's a lot of people that want to be that want to be told Donald Trump is super unpopular and all of these sorts of, and they're going to come and flock to my live stream because I'm saying that? Because from what I've seen from every media outlet out there that's doing that, because a lot of mainstream news outlets have basically been doing that, and they've just become they've just been absolutely savaged. Like, nobody watches them anymore. I kind of think that if I came in and I was just sucked up to Donald Trump on absolutely everything, that I would probably get more viewers than if I was against Donald Trump on absolutely everything. You know what I mean? But what I care more about is that we understand the market and we're able to make predictions and trade. And I don't think that scalping is very good in this situation. I mean, don't get me wrong. You can make a ton of money from doing it. And there's going to be somebody out there with the balls that's going to become rich off of this. And then 6 months from now, we'll hear about it. And, we'll all be, oh, why didn't I take that trade? Blah, 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 blah. Right. But it's kind of like, you have to get lucky. You know what I mean? You have to get lucky. So it's like a huge risk. And it's not a risk that I personally am willing to take, because I've been screwed over super hard in these kinds of situations. So kind of situations that tend to blow people's accounts, right? But you can take like longer term trades that are less risk, like swing positions with like, for instance, what I have with interest rates, right? That's cool. And that is like the main objective, and not to pick one side or the other politically, even though I certainly have my own biases when it comes to the politics. Yep, or you could do it in sim, that's true. I'm switching to ZT. I mean, it was how much was it from 22 to 10? So that was like almost a full handle. Is your robot based on the price ladder? It is based on the market orders. So basically, it's looking at the imbalance between market buyers and market sellers. And if there's a certain amount of imbalance within its rolling window, then it will go along with that imbalance. So what happens with the trade that it's currently in is that because of headlines, you saw a ton of really quick buying in the treasuries. That pushed it over the threshold and it took a long. It took a long at 28. Took a long at 28. Okay, consumer confidence leaks into financial markets, so it should matter unless you're... Okay, so let's talk about that. So there is a general theory that consumer confidence is a leading indicator because the U.S. economy is based largely on consumption. The U.S. economy is largely based on consumption. So if consumers aren't feeling very confident and aren't buying things, then that's going to hurt the economy overall, right? Well, some issues with this. Number one, the consumer confidence survey, or at least the University of Michigan consumer confidence survey, is giving us just absolutely wildly out of line results. Like it's giving us results that it's never really given before. And frankly, it was giving results that are frankly a little silly. Like the consumer confidence among Democrats is lower than it was like during COVID and during the 2008 crisis. Okay, that's a little bonkers. And the divergence between Republicans and Democrats is kind of like, what the heck? Now, there's another survey, which is kind of more among economists and people that really know what's going on. Like the New York Fed, they have a survey of inflation expectations. Okay. And those expectations are more grounded. And I would probably be using those. Okay. The other issue, though, and the much bigger issue, is that the hard data is not matching the soft data. So for the past 3 months, you've been seeing all these things like consumers saying, oh, they have an extremely negative view of the economy going forward, at least Democrats. Democrats, very, very negative view of the economy and all these sorts of things. They're still buying stuff. So hard and soft data are diverging. So in this particular situation, I don't really think that consumer confidence is really going to be your most effective indication of where things are going to go. Of course, if trade war continues and everything falls apart, and then people will say, see, if you had followed the consumer confidence numbers, yada, yada, yada. But I think that if we're going to be going down, that there's going to be other things that can kind of show us that it would be more effective at predicting things than consumer confidence, frankly. So in this situation, I don't really think that the signal that you're getting from consumer confidence is very good. Now, for us on the short-term basis, I kind of feel like, is there anything? Is there anything that gives us a good signal? I don't know if there is. Because, okay, yeah, we're having a trade war. It's super bad. But all Donald Trump has to do is come out and be like, hey, we made this great deal, yada, yada, yada. And then it's going to shoot right up, right? Right? Like, what if Donald Trump tomorrow came out and said, well, I spoke with the European leaders and we have an agreement in principle where all tariffs are removed. Everybody's friends again. Like, like, not only is that possible, at some point, I think that that is a highly likely thing to happen. And so that makes it very, very difficult from a short-term scalping perspective to stay short. You know? Some of retail prices haven't. Well, no, we haven't seen the price changes from from this at all. No, we have not. and this brings me to another point that I keep harping on, but I'll bring it up over and over again because I think it is the thing about this situation that the public seems to misunderstand the most, and that is that if you have inflation across some products and not other products, then that inflation is going to come at the cost of less demand for those products, and or if for products that are really, really necessary, like food, for instance, you have to have food. So regardless of how much it goes up, you're still going to buy food, right? And so then instead it steals demand from other things that are more discretionary that you would have bought. You don't buy those now. So because of that, you don't necessarily get broad-based inflation. And in fact, what can happen is you get deflation because people stop buying as much and you go into recession. Well, no, I didn't say that spending hasn't been affected by Trump policies. I said that spending hasn't been affected by consumer sentiment. Basically, I'm saying that the consumers that they are polling are being dishonest. They're lying to themselves. They're saying Donald Trump's going to end everything and yada, 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 but then they're not actually changing their behavior. So maybe they actually believe it, but they're not changing behavior. Divergence between hard and soft data. And in that situation, I think that means that the soft data is, you can't trust the soft data. I'm not saying that it's right or it's wrong. I'm saying you just can't trust it. So you just don't factor that one. You just ignore that one. Look at something else. But Lloyd, you said earlier, consumer confidence leaks into financial markets, so it should matter unless you are still paper trading. So what you were doing is you are embracing the theory that consumer confidence, poor consumer confidence, leads to less spending and a weakening economy. And I'm saying it hasn't. I'm saying that the consumer confidence hasn't followed through into behaviors at all. So it's not the consumer confidence. Now, if prices change, then that's going to change people's behavior. But then is it because the prices changed or because of their confidence? Right? So really, in all practical terms here, I think that you just ignore the consumer confidence number and look at other things. So in this particular case, like the numbers I'd be looking at is that, Goldman and pretty much all of the other analysts expect this tariffs to be a 1.7% hit to GDP or something like that. So basically it gets us to like maybe 0.3 growth year over year. Now, people will say that's not a recession, but actually it could be, because it could be, we have negative GDP growth this quarter and negative GDP growth the next quarter, and then in the winter it's enough that annualized it is still 0.3, but that would still be a recession, right? So that's one thing. But then the second thing is that that's just the anticipated effect from like the prices on the goods that we can see, and those go up, and the decreased spending from that says that that gets us to spot 3. once you consider all of the things about like that the market is a dynamic system and all of these sorts of things, I think that it's extremely likely that that is a recession. I think that that probably understates the extent of the damage that will be done, right? So probably a recession. And yeah, you're probably going to see decreased consumer spending because of the prices when the prices change. But it looks to me like that people's behavior is not going to change until they actually experience the prices. So you can't say that it had anything to do with the consumer sentiment. If you were to create a robot that looks at Donald Trump's approval rating and tries to trade the markets based on Donald Trump's approval rating, I don't think that it's going to do very well. Okay, you know what? I'm going to do this the crazy way. ECB President von der Leyen says Europe has offered some 0 for 0 tariffs. Oh, well, that's good. So I really feel that the way that Donald Trump went about this whole tariff thing was really like the worst way you could have gone about it. And when I say the worst way that you could have gone about it, I mean like the most negative for markets, because he created this calculation that is basically based on the trade imbalance between the two countries and not necessarily the amount of tariffs that the country has on us. Because it is like with Europe, I think it's unfair. Europe has tariffs on US cars, for instance. Okay, like there are protectionary measures. Every country has them. There's like good reasons that they have them. Has it really already been an hour? Well, okay. Oh, actually, you know what? That's because I changed something and gave it a target. We shouldn't have done that, should we? Well, we'll run it that way for today, but we really should. Well, I don't know what you guys want to do. Would you prefer a set target or a time target? Or if you have an alternative suggestion for an exit, I'd love to hear it. Okay, anyways. So where was I? So the problem with his kind of like this number represents the net trade imbalance is that the trade imbalance is not just the sum of all cheating. Sometimes there is just an imbalance in trade because one country wants something more than the other country. Right? Or has more to offer the other country, however you want to present it. So a country could come in and not do any currency manipulation, not have any kind of tariffs, and still have a really big trade imbalance, right? And so you go to the administration and you say, okay, yeah, we have a tariff on your autos, like Europe. Yeah, we have a tariff on your autos. We will get rid of all tariffs on you if you get rid of all tariffs on us. But then based on the framework that they have, of course, Donald Trump could say, okay, yes, your tariff goes to 0. But under the framework that they have, it is, well, you would have to just wait until the trade imbalance is gone. Or another way of thinking of it is like, or another possibility rather, is, okay, Donald Trump will negotiate with them. You get rid of all your tariffs, we'll get rid of it. But you're still doing currency manipulation. So it's still going to be 10%. Like, you can get the minimum now. You can get 10%. But you're not going to get 0. You get what I mean? So, and then there was a lot of uncertainty done around it. He did it after the market was closed. So it increased volatility because there's less liquidity during that time. And so there's just so much uncertainty that it is just creating real absolute chaos in the stock market. Now, I don't know, maybe from this perspective, there is an argument to be made that he really shouldn't make decisions based on the stock market and it doesn't matter what the stock market does. Okay, fair enough. But, you know, this is something that could really turn into a big ugly mess, really hurt the economy, and a recession would very much damage Donald Trump's intended policy platform or whatever, policy goals. A recession would hurt Donald Trump's policy goals. So, you know, I kind of think that they need to start getting some positive headlines out there that like that they've made a deal with somebody. And if there were to, for instance, speak to Japan, and Japan says, because they're the ones that are like, we're not going to retaliate, like they're being the nicest about it, right? So maybe Japan is the first one to go to. We say, okay, Japan has removed all tariffs on us. We're going to go to 0 on their number is 0 tariff for Japan. And just even making one deal would be so positive for the market, you know, and then this thing could completely flip around. He simply doesn't care. Well, I don't think he cares what the market does right now. But you know what? The thing is that all of the policy advisors from Donald Trump. So let me just give you a couple of examples. What was it? Lighthouser? I can't remember his name. But like one of Trump's chief economic policy guys, you know, when he first met with President Trump, he said that the first thing Trump said was, how do we reduce this deficit without creating a recession? Everything that the administration officials have said suggests that they do not want to create a recession. In fact, today, the White House directly pushed back against this an idea that Donald Trump is purposely tanking the markets to get lower interest rates and all that sort of stuff. They straight up said that, and they said, we are not trying to create a recession. And they shouldn't be, because honestly, a recession, we do need interest rates lower, but a recession would hurt Donald Trump's policy goals so much that you got to prevent that from, you got to prevent it from going that far. Right. And it's okay to like have a trade war and the markets, you know, throw a tizzy fit and be down 10%, but then you get all of the deals and markets go back up and it's like it never happened. That would be okay. But if this just turns into, oh, well, we just keep the tariffs on for the rest of Donald Trump's term, then you probably are going to get a recession, right? So I think, here's the thing. This whole thing throughout all of Donald Trump's campaigning and everything was like, well, you know, I don't think that Donald Trump is really I don't think anybody expects that anybody will actually pay the tariffs that he's talking about. They're just to force negotiation. I think that the way that this played out, I think that the big takeaway from all of this is that we need to stop trying to guess him. Because the whole thing is everybody trying to guess what he's thinking in his head. He wants the economy to go down. He wants tariffs. He doesn't. right? You're all trying to mind read Donald Trump when so far he basically did exactly what he said he was going to do. So I think that at this point, we should just take him at his word and stop trying to second guess what he's thinking. It's indisputable that Trump will go down in history as the guy who broke the glass. I don't think we can say that until this is all over. Given the fact that he tariffed uninhabited islands. Yeah. Well, because they use the calculation. They use the calculation. I don't think that it's a very good calculation, but they had that calculation. My goodness, is this really gonna... So I had this whole thing that was like, okay, I'm probably like talking a little bit too vague. I think that one of the things that drives me crazy is when somebody makes a comment in chat and I'm not 100% sure what the context that they were making that comment in. And so I really prefer when you guys talk that you include all the context. But the truth is that I do it too, don't I? I assume that everybody that's watching the stream right now, that they've been here the whole time and they know what's going on. Okay, I have a robot. It trades based on an imbalance. On Friday, we did a little bit of investigation and we kind of decided that it usually doesn't get more than 10 to 12 ticks, even though it's possible. And so instead of holding it for an hour, we should have it take a set target. That way, it can take more trades. Like if there was another impulse long, it could get in again instead of having to wait for a whole hour. So we did that. And when it took the trade, when it took the exit, I was kind of like, well, I would kind of prefer that it holds on to it for the hour because this looks like a really good trend up. And yet, it almost immediately turned back around. So the exit was perfect. So I was wrong. The exit was perfect. I don't know. There's been something in my trading that, like, for some reason, it's hard to get a winner more than 10 to 12 ticks. Not that it doesn't happen, but, like, it was something like, there was this one period where I had, like a dozen trades where I made 10 ticks, I didn't take the exit, and then it came all the way back. And here it's done it. So that is so interesting. For an unemployed guy with money in the market, you're remarkably confident. Well, I don't know. What is it that I'm saying that makes you think that I'm confident in Trump? I don't think that that's the case at all. I mean, I'm kind of saying I think there's going to be a recession. I'm kind of saying unless there is a backtracking in policy that the U.S. economy is likely to go into a recession. I'm looking for emergency rate cuts or some sort of action from the Federal Reserve soon. But I also expect Donald Trump to backtrack in some form. Which is to say, like, come out and start saying there's deals, right? So I really don't think that that's confidence in Donald Trump. I think that my position, like of course there is this one thing which is like, well, what is the purpose of our stream, and we're going to stick to what the purpose of the stream is, and that isn't to like elevate or diminish Donald Trump, but to trade, right? Understand the situation, understand the politics, understand how it might affect our markets, and to find trades based on that, right? But if you were to ask my true feelings, my true feelings are that this is all already kind of decided. Like, I think that there's a lot of people that will say, like, okay, Donald Trump did this thing and now it's bad and it's all your guys' fault, you people that voted for him. And my take on that would be, it was always going to happen. This was determined probably a long time ago during the Obama administration. Like the point, the place for a decision point was so long ago, and once you made that decision, there all these small little interactions that go on in the economy kind of add together to create a certain high level behavior that is undesirable, and so it's going to play out a certain way. The result of a lot of Obama's globalist policies were that it hurt everyday Americans. And not everybody is a tech worker. I'm a tech worker. Yes, I'm unemployed. That's something like 5% of the workforce. Okay? We're basically, we've created an economy where like the only two sectors that are doing really well are finance and technology. And that's only like 10% of the workforce, right? That's not a sustainable thing. It was inevitable that eventually the people will come together and find a way to try and change that. And Donald Trump happened to be the person that was available. And that's why things have turned out the way that they have. Does that mean that tariffs are good? No. Tariffs overall are going to hurt the economy. Generally speaking, they hurt the economy. Of course, within a dynamic system, it might not be quite so clear. But because you're like putting tariffs on everybody all at once, that I think that that's something that pretty likely to create a recession if it doesn't change. Okay. But again, like it was gonna happen. Even the whole thing with like, okay, well, COVID was one place. COVID was maybe one place where we could have made decisions that could have been different. We could have chosen to not be absolutely crazy and try and shut everything down way longer than it needed to be. Like the COVID zero nut jobs. Okay, we could have ignored them. Kept things locked down for a month and then opened it back up like we did here in Utah, and things would have been a lot better for the Democrats. So that's probably one mistake that they made that they could have fixed. But then after that, you know, all these other things, Joe Biden ended up being the guy. And then, of course, he was going to do terrible. I mean, I predicted that at the very beginning of his term, how that was going to go. And so Donald Trump gets reelected. And then Donald Trump gets reelected. He's going to do what he's going to do, which is, you know, follow through on what got him elected, which was people that are suffering at the hands of a globalist policy that doesn't really help them. So I don't really sit down and are like, oh, it's this person's fault or this person's fault. Like, what's going to happen is going to happen. And we've been on this path for a long time. And if you wanted to do something about it, you should have told Obama. You know, like. Okay, so I was doing some programming here. I'm gonna get back to that until you know, I'm sure that you guys have more comments so we can address those. That going to work? Let's see. lowercase value. The market seemed to like Biden. Well, the market was pumped by Biden is probably more accurate way of expressing what happened. Was this big jump? I have no clue. Well, actually, no. I think that is just a combination of all of the different headlines that we're getting. They're all coming out so quickly that I don't know if you can really really pin down one. But let's see here. This UK Prime Minister Starmer was saying stuff. Different people saying that they're holding discussions. I don't know if it was that. At the same time, it could just be the markets retracing because they just can't keep that selling up. Doesn't like the way I'm trying to do this reflection. It says type or namespace of value could not be found. See, when I mouse over it, it tells me it sees value. Okay, indicator value. But the compiler says I can't see it. Okay, I can call this as indicator, and that should. Did I spell it right? Indicator. Okay, but it still doesn't see value. Oh, because that needs to be... okay. Type of... Type T. This type of take a string. Come on. Need Visual Studios. For some reason, I'm having a hard time finding the documentation for that particular thing, so... System.type. Oh. Maybe like that. It's gonna be funny if I can get this to work, because Ninja Trader says that it shouldn't work. Oh, down here. Yeah. He could be doing it. That's Maybe it doesn't work because you can't just say new type. You have to actually use the NinjaTrader accessor method. Or I don't know what the correct terminology here would be, but like normally I would go and I would say SMA foo at the top and then foo equals SMA like that, right? So how does this code know which one of those to call? We could do it. You would just have to be building the method name explicitly. NinjaTrader's code does it. I keep playing the mini bumps as pull traps. Okay, well. So that means you're going short this? Have fun with that. Well, I don't know if liberal heads will explode if we close higher, but my head might explode if we close higher, because that's a big gap to close, right? That's a big gap to close. Although I will say that where I find that bottoms tend to form is when you start to get two-way volatility. Like the worst is when it's just down, 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 and it's just like that day after day after day. Like that's the way it was at the beginning of Obama's term. I tell you what, it's really frustrating to me that people forget about that whole thing. But for the first 3 or 4 months of Obama's term, the market just sold off every day because of all of the changes that he was making. But when it's like you're down 100 points one day and you're up 100 points the next day, and you're getting it both ways, that's where bottoms tend to form. So if we were to close higher on the day, that would be the sort of thing that would start to make me say, at least from a technical perspective, okay, it's now somewhat reasonable to be trying to play bottoms. I'm probably not going to make that play, but that's when it starts to become like a possibility. There's one of the things that frustrates me right now is that my larger play is that interest rates will have to come down. And when I was making that decision or prediction or whatever we'd say, that was not because I thought that there was going to be a trade war. Right? Like it should be going down regardless of trade war. And I kind of feel like that trade war could also make interest rates come down. So it's kind of funny to me that the treasuries are fighting it so hard, you know? Well, there's new lows in the treasuries. I tell you what, man, I kind of feel like my algorithm just got lucky. Kind of feel like it just got lucky. Now, this is turning into such a disaster on the downside that I don't know if this is sustainable. Like I think that it's about to trigger short. Could get stuck. It could end up taking a really bad trade here. Let's see. Man, that's really falling apart. It's really falling apart. Wow. Look at that go. That's bonkers. A different headline must be hitting.
Order submitted.
There it went.
Order submitted.
$15. Really? So you know, the micro tenure, even if I have not been taking trades. So for those of you not here every day, I have not been taking very many live trades because we're going through this unemployment period. This is kind of funny. I was talking to my video editor the other day, and he's like, "Well, so you've been trading all this time, and you didn't save any of the money?" And I was no, actually, I saved most of it. It's just I might have to live off of it. So I'm not taking any risk right now. But even if I was in the risk-taking mode, man, I would not be able to trade this. Like, that is a 10-point spread in the micros. I can't touch that. No way. I mean, that is like basically a full handle. Okay. Oh no, that can't be the headline. What? Okay. So what I'm hearing on the News Squawk now is that a legal challenge to the tariffs could be submitted as early as Friday. Is that really why the market is trading? If that's why the market is trading, then I think you reverse this thing at some point, because, like, holy crap. Okay. By the way, the algorithm, he got away with it. It just kept going and he got its target. Let's see how much further you think, how much further it could go. Or that would be hilarious if it were to flip around again. That would be hilarious if it were to flip around again and it got a good exit a second time.
Target filled.
Wait, did it take two? It did. It went short and got its target on that twice. Howard, I didn't run a combine, but you know what? Depending on how much leverage you put on it, it would be passing a combine right now for sure. So it just took 8 ticks 3 times. Wait. So 3,000 divided by 15.625. We have to make 192 ticks. So, and we just made 8 times 3. And then you could maybe say times 3 is 72. So that's like a third of a combine right there. And then Well, okay, so 192 divided by 3 contracts is 64 ticks. Divided by 8 means you would only need 8 profitable trades, or a net 8 profitable trades. It has definitely done that. So it would have passed. That's pretty crazy. Trump already backing down. Well, I don't know if the move is because Donald Trump, quote, backed down. Actually, this is very interesting because I'm definitely seeing the narrative Donald Trump backed down, right? But really all I got was Trump advisors. Wait. Okay, so my news squawk. The news squawk is blaming this on Hassert. White House senior advisor Hassert, there are some great deals countries are bringing on tariffs. Trump will decide if the trade deals are great enough. So that has not been coming through on the major outlets, but the news squawk is highlighting that one as a possibility. That is still not something that I think should create that big of a move. Okay, Amanesh says he's pausing tariffs for 90 days. Okay, where can you give me the name of a Twitter account that's saying that? Okay. Hassert is... There you go. Okay. Okay. Okay, the news squawk is now saying, okay, so the Hassert is talking, and the initial thing on what they said Hassert was saying was not the whole thing. Hassert is saying that Trump is ordering a 90-day freeze on the tariffs. So, yeah. Holy moly. Wait, how do I game this out? So first of all, I think if I were to take a trade, I think I would rather take a trade in ES off of this. Oh, how come I can't pull? There we go. Okay. ES. Okay, well, we've already closed the gap. So tough to say where a good entry would be. Yeah, so this person on the Financial Juice News Squawk is saying, watch, Trump will come out and say reports of me reducing / pausing tariffs are fake. That would be a possibility. Now, if Hassert is saying it, I believe it. Or Hassett. This really is nuts. Okay, you know what, guys? This is getting a little creepy to me. Honestly, this is getting a little creepy. I so the robot came in, it took a trade. I was kind of like, I don't know if that really makes sense. That, you know, it's already gone so far, it could roll back on it really quickly, right? Okay, it got away with it. Then, before I even realized what was going on, it took a second trade and did it again, and then it got out before price immediately reversed. Oh, and now it's gonna go long, huh? Now it goes long. Okay, one of these times it's gonna get spanked, right? But it is working so exceptionally well today. I just can't. I'm just so stunned. Like, I think that this robot. Okay, it already took profits. It's 4 for 4. No, wait, it's 1, 2, 3, 4, 5. It's 5 for 5. It only needs 3 more and that would pass a combine. Okay, well, this one it's down on it, by the way. It's now basically in its 6th, right? Positions, yes. Oh, it's actually, no, it's break even. It's break even right now. On the long side. Oh, now that's interesting. Because I don't think that, based on the news, I don't think that a long makes sense here for the treasuries, right? This is probably just a pullback on the treasuries. Is there a way for me to express the P&L as a... Let's see here. No. I'm getting these things were like a Ninja Trader, like the average price doesn't show correctly. It's annoying. It got 4 ticks. What's the reason for this huge move? The headline that is coming through is that Trump advisor Hassett is saying that Donald Trump will pause tariffs for 90 days. That appears to be the headline that is causing this move. Now, that said, there's a lot of crazy things happening here because the treasuries and the equities are already retracing most of, if not all of, this move. So maybe they are deciding that it is wrong. I don't know. By the way the robot is set up, like it probably should be, if it goes 8 ticks against it, it gets out, right? But I don't have any exit on it set, so it could just eat this whole thing, right? So this is like one type of market, you know? And so I'm wondering if I should just say, you know, when the market is really moving quickly like this, then have it trade this way and have a different kind of mode for regular conditions. That seems like something that would make sense. because kind of the issue with the treasury here is that it caught along, right? So like, but the treasuries could continue to fall from here. Like, this is going to be the most interesting. I mean, all of these trades that it's taken today have been interesting, but this will be the most interesting of them all, won't it? Okay, well, by the way, it is negative on its specific. I should change this. Hold on a second. I wish that Ninja Trader wasn't so stupid with this. Let's do it like this. Dude, when you're coming back and looking at the S&P on this now, that's bonkers. Oh my gosh. It is so crazy. That is so crazy. I need a different chart because I have my little, like, there was a slip in the ES, that indicator, and it draws things, and so that chart is kind of useless right now. I don't know what the difference between these two is. That's interesting. I'm just going to close that tab because I never use it. I'm going to duplicate a new tab. And on this one, I'm just going to take that off so that we can show. Hold prices, remove. Actually, we'll take up all of them. Okay. Okay. Okay, so we had this crazy drop. We were moving down like 100 points. And then this headline came out and we moved up almost 400. Let's measure some of these. Ruler. Okay. So there was like 265 point drop basically on the overnight open. And then, oh geez, that hold on. CNBC says no one at the White House is aware of a 90-day pause. Well, okay, so we had a 265 point drop. Then here, like the first little bit of trading, we had a 158 point drop. And then from the low up to the high, we had a 421 point jump, which has now almost completely retraced. So that is bonkers. And you can see here, like my algorithm is trading without a stop, and it is kind of heading down, so it's now Verax, where you're saying you're getting that from CNBC? CNBC said, I don't know if true, and put it on the Chiron anyways. Walter Bloomberg Twitter posted it. Oh, where is Walter? I have him on here. And I don't see him. Let me look him up directly. I mean, if it's that, Walter Bloomberg Delta 1. I would expect the treasuries to go considerably higher from here. I don't know, man. I'm just along for the ride with the rest of you. Okay, so now I am hearing on my news squawk the White House calling the headline fake news. Man, it doesn't get more crazy than this. It's kind of funny because there was people in chat saying that this was exactly what would happen. Oh, man. No benefit for Trump. He has Powell boxed in. Yeah, maybe. I don't know, man. Okay, I think on this point, because you know what? Like, I don't know if this is the most important thing that's going on, but it's the thing that I care about the most, and it's the thing that's most relevant to what we usually talk on here, which is the interest rate policy. So let's see what you guys think, okay? I mean, and there's two sides, but I'm actually interested on Powell's side. So how do we ask this? Is Fed reluctance to cut rates political? Yes, no, star poll. Right? So there's the one thing, which is Donald Trump trying to tank the economy so that he can get lower interest rates? But there's this other thing, which is like the Federal Reserve was cutting interest rates before. Oh my gosh, excuse me. The Federal Reserve was cutting interest rates before the election, like 50 basis point cut. And then since then, they've been holding tight and been making all these comments, kind of making it unsure when we'll continue to get interest rate cuts. Even on Friday, with Powell kind of holding that line, even though the market is like just completely falling apart. And so I think that a lot of people very much have this feeling that Jerome Powell just doesn't like Donald Trump and is keeping interest rates higher than he should. So do you agree with that or not? Live Action says someone's going to jail with this BS news. I mean, a fake headline. I think so. And you know what? Like, the thing is that we did not see that headline about Hassett from like reputable news outlets. It was something that kind of like it came out. I think the only reason why like My News Squawk and all of the other major outlets started well, like, for instance, they said that on CNBC they just put it up on the marquee even though they hadn't verified it. Probably because they were already seeing this huge move in the market that they had to try and explain somehow. So I need to come back and look at the code for my indicator because the code for our strategy, because I feel like it could be taking a trade right now. But there's also this other thing, which is that it shouldn't... Oh, I thought I did something about that. I don't remember what I did. Okay, now the Trump on X is saying Hassett did not say this. Oh, I see. Oh, but I only changed that on the other one. So I changed the other one to be like, only do it when there's a cross above. I didn't do that on this one. So with it being over 52, shouldn't it be entering again? Wait, unless I misunderstood. No, it doesn't have a position on right now. I'm going to change it, though, for next time. Even though it's doing what I want it to do right now, I do know that that's, like, not quite right. So... Oh yeah, let's get rid of this because our market analyzer column thing kind of failed. We're just gonna delete that. It took a lot of risk to do it, but to make $922 off of 5 trades, that's pretty damn good, man. It's too good. I mean, like, I think it's totally legit. If it was trading live, well, maybe it might have gotten slightly worse, you know, like maybe there would have been slippage. But even with the slippage, it went far enough. It still would have got all of them. And I'm just kind of concerned that I'm overfitting in some way, like that it is now basically overfitted to more more excited market action or something. I don't know. Should I? No, I'll just leave it right here. I don't know if you can really read that, but I'll kind of move it over a little bit so that it doesn't take up the whole thing. Okay. You have to deal with the risk of ruin if you have, yeah, for sure. The indicator has a property for me to set a stop. I just didn't have it set. Kind of seems to me that, like, I don't know. Hopefully we're not going to see another flip-flop. Who knows? It got out of the position. It took profits on the position, and for some reason it didn't get triggered in again, which is what I want, but not quite what I think the code should be saying. But whatever. It's fine. It's fine. Why don't you do a trailing stop? We could try that. It's interesting. I haven't tried that. Like, the thing is in the past, trailing stop has never worked for me. Trailing stop has always worked worse than anything else I have. But in this situation, maybe it would have worked really well, right? This is just for starting out your screen. You know what? I'm going to disagree with you a little bit on that. So I think that one of the really big problems you have to avoid is that you're going to see such crazy stuff from the market that it's going to mess with your baseline neurotransmitters. So like, you're going to get a huge dopamine boost, whether you're making money or not, just from watching the market move so much. And your body will tend to want to use that as like its new baseline. So it's really common, for instance, to, like, trade a bunch during a time like this and do really, really well. And then when the market calms down, lose it all. Because your mind still wants the crazy stuff to happen, and it stops happening. And then on top of that, that kind of like sets your expectations for like the rest of your life. Like part of why I'm not necessarily like just absolutely freaking out. I mean, it was a big move, don't get me wrong. It was one of the biggest moves I think we've ever seen. But I remember COVID. I was there watching 2008 to some extent, not on the DOM, but I was watching it. And many other kind of mini economic crises in between then, right? So I'm kind of over it. You know what I mean? But there is this kind of thing that's like, okay, yeah, a lot is going on, but can you actually predict it? Or is it like it's going, you're just jumping on board the wagon, you might not even necessarily know what the headline is, which is okay in a situation like this. That's unless you're doing that, there's kind of a benefit to stepping away from it a little bit. Okay. You can make a ton of money in these conditions if you can handle the volatility. Timing it correctly would be nearly 100% long. Yeah. I mean, but that's what's really wigging me out, is that the robot got away with it 5 times in a row. And every single one of them, I was kind of like, oh, I don't think that's gonna, no. But it kept going and it made it. Only because on Friday we voted and you guys said, yes, we should give it a set target. And reduce we didn't have a poll, but we talked about it, right? That's just nuts. Yeah, if you look at the daily delta totals in the Treasury complex, the amount of trade going on isn't all that abnormal, but the liquidity providers want nothing to do with it. The time I remember being like the best trade for me was during the quant crunch in 2018. And it was similar to this And I was just kind of scalping, kind of similar to the way that the robot was. And yeah, I did really, really well. But like, didn't do well after that. I often catch spikes and put a stop or break even. Yeah, but like, that's the thing is every back test I've ever done on these sorts of things. God, look at how bad I'm sweating. I shouldn't put my arms up like that. Every back test I've ever done on these sorts of things says that any kind of stop reduces your profit. The problem is that not having the stop puts you at risk of ruin. So you do have to have some stop. And so, the closer that your stop is, the less you tend to make. So like having something like putting your stop at break even, that does a lot to help you psychologically and everything. You know that like there's no way that you can lose money on this trade now, but like there's a certain percentage of the time where it will come back, and like it'll come back and then it'll go higher, and you lose out on that money when it would have gone higher, and so it ends up not saving you anything. I've never the you know, and the way that I programmed it in the past, we could go back and find the strategy where I tested this. It was, you know, once you hit a certain amount of profit, then you move your stop up to break even, right? But it performed worse than set targets. It performed worse than set targets in like almost every way. But mostly because it just reduced the amount of profit that you make. It didn't reduce the drawdowns, but it did reduce the amount of profit, was my recollection. Now, with those 5 trades, I guess with those 5 trades it wouldn't matter, but it would certainly make me feel better, right? When you add a market analyzer, is there like a default data series on it? Well, funny enough, it hasn't gotten another imbalance yet. Let's see if it gets... Oh, well, it shouldn't, because we should be ending here. Huh. What a crazy day. So, you know, I was talking with our video editor, because basically we made the determine, you know, now that, that we will get like the last unemployment paycheck, and then, you know, I really don't know what's going to happen, and I don't think that we should be paying for video editing, in those circumstances. But he's like sticking with, he's like still like talking to me every day, like, oh, let's make a video. And so I said, well, you know, I will try and keep track of everything that's going on and everything, and we can make like a weekly recap video. But man, so much has happened here with this that I don't even know where to begin with making a recap of this session. It's just that crazy. There's a child is up. Well, let's see what the results of our poll was before I get going. Is Fed's reluctance to cut rates political? After 15 votes, 53% of you say no and 47% of you say yes. Interesting. Well, I guess we're supposed to get more later today, right? So we'll see. We'll see. It's going to be interesting. There's no job loss data for them to justify. Well, so this has been an argument made before that the Federal Reserve did not agree with, Mikhail. So, you know, employment is a lagging indicator. So if we are seeing things going on in the economy that makes us believe that we are going to have job cuts very, very soon, the Federal Reserve is going to just cut rates. They're not going to wait for it to be seen in the unemployment data, because once you see it in the unemployment data, it's already too late. And you have to keep in mind that the effects of monetary policy are lagged. So it would help out the market here in the short term from like a sentiment perspective, I guess, but it takes like 6 months to see the full effects of Federal Reserve policy. So it would be very, very foolish for them to say, oh, we need to wait for the unemployment rate to spike up above 10%. And then they sit around and wait until July. And then, you know, maybe July, August, they cut, and then it takes 6 months. Like, by the time that it's starting to do anything, you're already in the recession, right? So now I don't think that they're going to do an emergency rate cut today, but I do think that they probably will come out and say something and make some sort of a policy change that should help, and perhaps will allow the treasuries to be a bit more of a flight to safety asset than they've been, right? Well, anyways, I want to keep trying to program this thing, but there's some things I don't understand about the market analyzer column, so. Where do you get all that info? It's just from watching all of the Federal Reserve press conferences for the last 8 years. Well, I've been watching the Federal Reserve press conference for as long as it's been happening. And that's been brought up many times. So, in fact, I think that one of the cases where this was said was like COVID, right? Like when COVID was happening and they started doing emergency action, and it was like, well, but the unemployment rate hasn't gone up yet. It's like, well, yeah, but it's going to. So they cut. kind of comes up anytime that they start cutting. Because it's almost always the case that when the financial crisis hits, that unemployment still looks pretty good. And in fact, like one of the things that I think is kind of interesting is that the employment market will give you signs that we're like close to a top and that we're going to start seeing some contraction, and everybody always ignores them. So the market has been doing that for the last 6 months plus. Basically, it's been a completely frozen job market. And that is not, I wouldn't necessarily put that as like a sign that we are going to get a recession, but it is kind of a sign that the economy is going into a vulnerable state. And that's kind of what I see, is that companies have been reluctant to do anything. Credit is just really not very available, so companies can't really do a whole lot anyways. And so they've just been holding pat, and people that are unemployed are having a very, very difficult time getting into the market, especially for white collar workers. And so it doesn't take very much for there to be like a real crisis and people do start getting laid off because people were already pulling back. So that's kind of what makes the market a little vulnerable, right? So yeah, you're going to see it before you actually see the unemployment rate spike up to 10% or whatever your threshold is. Well, man, the Treasury, it's calmed down so much, but the Treasury is still pushing this insane range. So, well, I think that I should just run with what we got. The algorithm did amazing today. That's something else. I think that there's still some major flaws in the way that it works, but I'm happy that it worked in this situation, and we should find ways to kind of say when we're in this situation, this is the way that you want to trade. We'll continue with that tomorrow, and I'll keep working on this on this thing. I was wondering, Uzi, with the whole moving average thing, what kind of moving average do you want it to be on? Do you just want it on a 10-minute moving average, or do you want it on like a daily moving average? Because it's looking to me like that matters. But I don't know how you do it on a daily. Yeah, that's a bunch of weird things. If I was making my own blog, this is one of those things where it's like jigsaw. You need to make a market analyzer and make a better one. Make a better one that has things like, are we above or below the 50-day moving average? And are we above or below a 10-minute moving average? And make those built in. I'm trying to find the most clever way to do it, and I'm not quite confident I've found the most clever way. I have a way here now, but I don't know if it works between daily and minute bars or how that works, because it looks like that all I can do is just look at on market data. All right, guys. I will see you tomorrow. Stay excellent, team.